May profits be upon you. We're going to take a look at the US dollar index. The US dollar index, the DXY. All right. First, you can see that I have a down arrow here. And I'm thinking the market is going to turning bearish. All right. If you remember what I put in the last two analysis videos, weekly outlooks on with the US dollar index, I was talking about it turning bearish just last week. And then we got this candle here. All right. The yields on the bonds and everything kind of turn everything around. So the Dixie showed some strength where I thought it would show weakness. And but what I will point out is that I had this fair value gap here drawn out, and I said, and I had my arrow from here to here. And I said, price is probably going to go into this bearish fair value gap and turn around. All right. I thought it would turn around sooner. It went past, I mentioned the midpoint, the consummate encroachment. I thought that it would turn around there, but it went a little further and filled the entire uh, fair value gap. But it is now looking like it may have lost some steam going up. Doesn't mean it won't gather itself here, consolidate, and then push higher again, like it just did here. All right, doesn't mean that. But let me go into it. Let me show you. If we go to the monthly, what I can see, sorry, is price broke above these highs, swept these highs with this bullish candle. All right, creating a fair value gap. All right, a bullish one. All right, what happens is you would expect price to continue higher if this is a breakaway gap. That's not what happened. Price came right back into it, corrected this move, and created a bearish fair value gap. And this one I labeled as a breakaway gap because uh, price created the fair value gap with this candle with this wick, and you would think that price is not going to revisit that. What you want to see is continued moves down and a second, a very important second fair value gap to form. The fair value gap is like an indicator to me that shows momentum, shows intent. All right. And when it's violated or disrespected, it gives you a definite sign of the market turning bearish or bullish or whatever, because when you see PD arrays being disrespected, you know that the order flow has changed. Okay, and you have to trade accordingly. You got to stay nimble. All right, doesn't mean you change your overall bias. No, that's not what it means. What you're looking at is where is price going, and you look for the liquidity zone. Where is the nearest point of liquidity? Where is it going? That's where you want to trade to. Anyway, so with this candle, you're thinking, okay, good. Price should form another fair value gap. But what did it do? It went to the bottom of this trading range and turned around. All right. What are we looking at here? That's where you go to the weekly and you say, let me take a closer look at this. All right. Here is that bearish fair value gap. Price comes back up into it, forms a bearish order block, uh, pushes down all the way into this order block, right? That trail all the way up. This is a strong low, in my opinion. A strong low. Why? Because it created a new high, breaking structure along the way, breaking to create a new high. That is the job of a low, and the job of a high is to create a new low. When it fails to do so, it becomes a weak high, and that means it'll be used for liquidity. It'll be rated for liquidity, targeted, if you understand. Okay, so with price moving up into the order block that was formed, it also filled in this a fair value gap. So a bearish fair value gap. It went through, gave this inside candle, which should immediately make somebody go, "What is going on here?" And then we get this bullish candle going into that bearish order block. Where is the next liquidity point? Let's go back to the daily. Where is the nearest, easiest point of liquidity for price to grab? I will tell you. See that line right there? All right, that is a low from Thursday, the low of Thursday. All right, that's where I'm looking. I'm thinking price is doing it as we're speaking right now. It was just a big green block. I said it would go up to this high here. Why? Why am I pointing that to that little line? Because I want you to see what I see. All right. See that low here? This is the beginning of the order block that was formed. Boom, boom. Price. I'm thinking price would have reached up into there, or at least the low there. But I was hoping that it would mitigate the order block and shoot on down. There is no fair value gap. There is no fair value gap to speak of because prices wicked all the way up. I'm thinking this is going to turn down, and this will be the point of the this move. All right, you can take this. You can trade it if you want to. I am not. I choose not to take a short here. Where am I looking for? There you go. All right. So I have this as sell side liquidity. Thinking price is going to make its way down to this sell side liquidity, and will what will we expect once it does that? Well, will it leave a fair value gap? That is what I'm looking for. I'm looking for price. Uh, Either it will form a fair value gap or it will respect this mitigated already by this candle, this mitigated fair value gap here. All right. It's already there. Will it continue up? It very well could. But right now, as it stands, I'm looking for price to come down and take that low. All right. And we'll see what it does once it gets here. If it respects the middle of this fair value gap, the consummate encroachment of this fair value gap, then this it, things will get pretty interesting. Let me also mark this high right here. This is where fair value is when price hits this, it'll have hit a fair value area, an area of fair value. All right. This is the fair value gap. All right. I'm looking for this gap to hold and push higher. If it doesn't, that's fine. Look out, but I wouldn't take the first move it makes up here. When it takes these highs out, and this will be the next point of liquidity right there. Uh, if it takes out this high with a close above and it gives a fair value gap, I'm looking, leaves, it forms a fair value gap. And then I will be looking for a push higher. If it takes this low and follows it with a fair value gap, if it takes this low and leaves a fair value gap behind, I will be looking for shorts. And I'll be looking for shorts down to my original targets. This is a bearish order block. So I'm definitely looking to see this hold, and you see the rejection from it. So if it once we go down to the 4 hour and the 1 hour, and we start to see fair value gaps being formed bearishly, this is an indication that price is going to be taken down. You want to take the first one? No, not me. I'll be patient and wait. There's some news coming Tuesday for Japan, Wednesday for Canada, and Thursday for the euro. All right, for interest rates. That's going to move the markets. So I would be very careful of that if I were you. Wait until you see some fair value gaps form. That'll tell you which way price is going. I hope you enjoyed this video. I want you to trade carefully. This is a wait and see kind of week. All right. Midweek, things are going to be moving. All right, and you might want to give Monday for the market. You might want to chill out on Monday and give the markets a chance to breathe. That's my message from me to you. All right, I don't give financial advice. I'm just sharing my view of the markets and trying to create a bias. All right, and yeah, we'll see what it does here. May profits be upon you, and I will see you in the next video.